Good morning, good Friday, good Friday. How is everybody doing? I hope you had an excellent week and you're having a great day. I am not a financial advisor. This and all of my content are for educational and personal purposes only. I'm here for the charts. You are here for the charts. So let's get started. And before.
This is Flash FM.
Hello, America! Wake up and go to bed with
Yes.
Terry and Tony.
Gloria, you're always on the run now, running after somebody. You gotta get him somehow. I think you got to slow down before you start to blow it. I think you're headed for a breakdown.
Oh, yes, my
So be
people.
careful not to show it.
Welcome to the weekly review. Getting started just a little bit with motivation. This is the weekly review. What happened during the week? Let's reflect on our trades, your trades, my trades. What is going to happen? Well, depends on what is happening. So, we began with this correction on Sunday with this huge opening gap to the bottom and Asia bringing that nice bullish volume up here. So that's interesting. Okay. And I'm going to go to a clean chart so that we could look at, let's go to this one. Maybe. Yeah, this one's nice. Which one was this one? I think this was, yes, this one is, we could use this one. Okay, so looking at the sessions, each session, how does each session behave? So let me go back to how we were coming up and how it started shifting to the downside. Remember, Asia is the snitch. So as Asia buys, it holds support and resistance levels, buys. When it starts selling quickly and hard, that is a clue, that's a tail. So Asia starts snitching. One more time, Asia up over here, big sell-off. So Asia starts flipping things over, and New York marks the bottom. Remember this. And you can go back in time. Don't believe me. Go back in time and check every correction, how it ends. And we've mentioned it. I mentioned it to you in the groups as well. New York hasn't come in the picture yet. New York is the one that marks usually the bottom, and you could see it here and here. New York was last and Asia started snitching. Okay, so go back in time and study this. I'm not gonna do that because the focus is another one. During the correction, each session had to continue to say selling, right? So Asia sells, London sells very hard, New York says wait for me. At 10 in the morning, 10 to 10:40, 10 to 11, 10:45 exactly, and 11, they start selling at the top. So this was a very weird day because they did start buying at 10, but they got there before 11 and started selling at 11 and held here. So that was an interesting behavior for New York. But their PM session, remember the PM session is key. And look at the PM session. We go here. This is 12. That is 2 p.m. 2 p.m. That's a short. Those are bearish candles. Those are sells. They're selling there. 4 p.m. and 3 p.m. 3 to 4 selling. So that's the important session. Remember that. What does Sydney do? They come up, look for liquidity above these highs into this empty area, this gap, this imbalance, and then Asia continues selling the story to the downside. They start selling. Very different from these up, right? Liquidity bounce hard. This is the opposite. They look for liquidity up over here. They retest these resistance, sell hard. They turn back around, sell, and short into toward the end of their session. So what does London do? London says, okay, we're going down. Wait for me. I'm going to manipulate the 10 a.m. morning and sell hard. New York confirms because they've already gone up here. They're in already. They've positioned themselves all around these sessions. So they just dump it, dump it, dump it. Over here, with this huge Asia, this is where Asia starts niching. So Asia starts coming down and right below 3,000. Right below 3,000, huge buy. So this session was like this one. This session is the equivalent to this one in the opposite direction. Asia starts snitching, saying, wait, something's going to happen around here, guys. Be careful. And so London, they try to catch up. And New York is the one that says, okay, you guys, we're going to go up. But I got to be first. I got to be the last one in with the better price. So they manipulate this low and quietly look at the time. 1:30 to the closing, buying. So this morning session was looking for liquidity below these lows and closing back above them. Watch this. We're reviewing also the strategy as I make this review. But these lows, New York takes them out, and toward the end session, they close back above them. You see that? So what you want to see is those lows get respected in the future. That's it. That's like the tip of the iceberg for the strategy and for the V shape. And so that is another reason why I've also sent the maybe, right, of the head and shoulders. But anyway, so what do we start seeing after that New York low? Look at each session, how it's different now. Sydney is buying, Tokyo is buying. You see that? London is looking for liquidity and buying as well. What is London's key times between 5:30 and 7? So that window, specifically 6 to 6:30, that's where London sort of says, this is what I want to do. And what we see is from 5:30 to 7:45, they just kept buying. So this is a huge buy at 5:30 under 3,000. Please, important, under 3,000. Why? What's so important? As gold breaks these barriers of 3,000, 350, 3,100, 3,150, those are psychological but mostly institutional prices. What does that mean? If I'm working at JP Morgan, if I'm working at a central bank in some country and I want to buy gold, I'm going to call London or whoever's dealing most of the gold. And I'm going to tell them, hey, I want, I don't know, a ton of gold. What's the price on it? Like, they're not going to tell you, oh, just pay me 2,987.50 for that time. You know, it's going to be like, what are you talking about? Just give it to me at 3,000 or anywhere below 3,000, I'll buy. And so these orders, these institutional orders are right below and at 3,000, 3,050, 3,100 because it's simply logical to deal and negotiate at those round numbers. So as you see gold reach these levels, it's going to hold as stepping stones in the future, especially when the situation worldwide is so delicate and gold is just going to keep rising. Okay, as it goes down, if it were to come down eventually, then yes, you target those levels in the opposite direction. So right now it's like 3,002 something. What's the first target if it starts coming down? Well, 3,100 and 3,050 then 3,000. But you got the point. So below 3,000, what's each session telling you, right? So over here we start seeing that change in structure of each session. They're now buying. New York, remember, New York has to be always the last one, and so they also intend to retest this area and these low support hold as support. Okay, so again, look at the time. 1:30 is not a coincidence. It's algorithmic. Look, 1:30. Why? What's so special? That is how New York positioned itself for a reversal. Go back in time and study it. So they go down, they start the session, 8:45 they go up, and by 10, look at the time, 10 they dump. They dump to position themselves towards the PM session. 1:30 buys to the closing. Over here, 8:45 to 9, 9:15, 10:45 dump. Same thing here. 10:15, 10:45 dumping. 10:30, 10:15, 10:45 dumping. 1:30 to the PM session with buys. So again, they're showing this support is holding. And who's this niche? Look at Asia. You see that? So this is the sort of like calling it like, hey, heads up. And this is the I told you so by Asia. Same thing from over here. Hey, heads up. Over here, I told you so. We're down. So over here, heads up. We're gonna go up. I'm telling you, we're gonna go up. Look at it. I'm pointing out to Asia. And then over here, I told you so. Then what do you see? Each session has to hold structure and tell the story. So what does London do? Consolidate, manipulate that consolidation. Look at the time, 7, 6:30, 7. What does London want to do? They want to buy. If they were going to sell, they would have sold. Period. Then what does New York do? Retest this area of consolidation. I'll throw you a bonus here. Watch this. You grab your Fibonacci. You measure from the bodies of the candles, the 50% right there, algorithmic. Now, I'm going to reflect on this one here with you. We were looking to probably have a sell-off. And that is something I personally got confused with. And I didn't listen to my rule number 3, which is the trend is your friend. And so I kept seeing this and I said to myself, wow, are we really, is it time? You know, under 3,000, yes, it's like things are lining up. The only thing that was sort of, it didn't convince me is that there is more here to respect, sort of like this area. To me, it was like, I think this is a more important range to retest, like 2,950 and below it, you know, like, because 2000 it bounced at 2,956 and I sort of fell into the belief that it was better or more, I guess, for some reason logical to come to 950 or lower. And so I thought this was going to be a pullback and potentially a reversal. And New York, because New York was back here so high, I said, that's strange. They might want to respect any range here and maybe retest the midnight open that they never retested that morning. Also, if you draw this trend line of the head and shoulders, it usually has a retest, but it already did. It was very small right there. Like all this range of Asia was the retest of that breakout. And so I fell into this. I fell victim of my own beliefs. And it comes to show it's impossible to really not think or not have wrong ideas, so to speak. By the way, I was looking at this. We actually did a live stream and I pointed this out. I said, well, that's interesting. Yeah, that's a 50%. Yeah, sure. If it holds, why not? Perfect. And it did, you know? So this is a reflection like, okay, this, whenever we start seeing Asia snitching, Asia confirming, the structure holding, a nice breakout below key lows, trust the system and trust these things and look for the trend is your friend positions, meaning buys in this case. And anyway, so continuing to analyze this session by session, London confirms it wants to buy, therefore New York says wait for me, right? I'm gonna catch also a nice entry price. And because it was starting to come down quickly, and this area also was a potential support, right? This high over here and this like sort of imbalance in the 1 hour and 4 hour time frames, New York could have manipulated these lows and then rejected and respected them and continued moving higher. That's the only thing I thought was going to happen, and that's what I was waiting for. And I personally missed that New York sessions push. If we go to the 5-minute, I didn't see a clear V shape like under here except this one. but it was different because you know how the structure should be. And even in the 1 minute, if I see the 1 minute, it was a weird, just sort of consolidated and a very equal low here. So these equal lows also got me because I've seen gold before, how it leaves those perfect equal lows, goes above a high, grabs liquidity from there, and then targets the previous lows. And vice versa. It'll leave very equal highs, come below, grab liquidity somewhere, and then target those equal highs. So that's the only thing that confused me. But other than that, it just kept, it kept showing you intentions to the upside. This was an algorithmic price entry. It respected that. It also respected, if I go here and draw this bullish flag, that was also something I missed, right? You have this structure, the breakout of it, and the retest to those lines, to that line of resistance that matched the 50%. So this was also a textbook bullish structure, breakout, retest, continuation. Nothing, nothing extraordinary. And the trend is your friend. So let's continue going to the 15-minute time frame. Or I think the 5 minute is, yeah, this one is good. So what do we have? We had the FOMC. They quickly sold to grab liquidity. And look at the price again. Look at price. 30.40, but what's in here? 30.50. Okay, so I'm gonna mark 30.50 basically right there. Look at how price respects those ranges, and just below it and at it comes. So 2:15. Again, the PM session is a very important session. What happens at 2:15? Right below 30.50, huge buy. Not a coincidence, it's algorithmic. Where does that wick go to and respect that resistance? These candles. Huge buy. Who confirms? Sydney open. Huge buy. Retest. Buys. Tokyo continues to buy. Retest. Buys. They're not snitching whatsoever. They're not going against the trend. They are confirming all of this push. So this was also a big clue that the market was not going to come, is not going to flip. It's actually going to target previous highs. So if you, the moment you start seeing this confirmation each session telling the story, you really immediately go back in time and target the previous highs, literally previous highs, because the market, when it gets to when it starts making its way up and it consolidates and continues and consolidates, it's making its way, and it'll break through to resistance. So these consolidated and accumulative phases are normal and powerful, because that is how also bears get trapped, because they start seeing prices like, oh, it's going to come down, it's going to come down, it's going to come down, and then it goes up again, and it really goes up with strength because that's the trend. And so these moments in which gold wanted to sort of come down, came down, here it tried coming down, Asia also tried coming down. Psychologically, you think, wow, there's something's cooking. It could eventually break these lows and then come lower. That's true, but it's when you study each session and you go back to everything we're doing, that's the trap. That's the psychological trap that you shouldn't fall to. Rather, go and see what each session is telling you. They're being actually very bullish. So Asia confirms here, breaking this resistance. This was a classic buy resistance, right? Everybody's selling, you're buying, and you're taking all those stop orders. So Asia confirms, breaks with strength, and it doesn't retrace hard. It doesn't sell off. It just holds there. And it does that because it sets up London. So it offers London, it gives London this consolidation area for it to manipulate, and then New York distribute it. So as you see and know, you have, during an uptrend, consolidation, you have the manipulation, and you have the distribution. Sometimes that happens within one session. Sometimes each session plays a role. So Asia consolidates, London manipulates, New York distributes. That is a very typical bullish day. And so again, Asia starts making the low of the day here, breaks up, consolidates. It offers London the opportunity to manipulate, and then it stops. It holds. Look at the supports. Look at the support of Asia. When it got manipulated, it held. You see that? So the bodies of these candles and these lows, London, after manipulating it, it respects it. And here's a V shape. This is a V shape. Look at this one. You have 1, 2, 3 below 1, 4 above 2, and 5 respecting the range between 2 and 3, and the support that the V shape broke. So you have 1 below these lows and 2 closing back on them or above them. It actually closes above them. This is a 15-minute time frame. If you go to the 5-minute, there's a V shape within all of this, a smaller one. But this is how the 15-minute time frame is also powerful, because it shows this corrective push down, respecting these highs, coming right into this imbalance, and the market trading quickly back above these lows. So that is a flip in structure. It's not bearish, it's bullish again. And then these areas hold. The bodies show it to you, the candles as well, the wicks rejecting. And so what does that do? It triggers that continuation. And even New York tries to break those and it fails. And if you see that, also that's a big clue. Look at the time, 9:45, 10 o'clock. Algorithmic, period. Huge buy at 10. This was a huge buy at 10 in the morning, breaking this high. How was the market reaching for this high? It was breaking strong, consolidating, and tapping the roof, knocking on that door, knocking on it, and breaking it through. If you see that, that is powerful. If you see gold knocking on the resistance and not rejecting with the sessions, and the sessions not telling you it's going to sell, but rather it's holding, expect a breakout. Go back. I'm not just cherry picking this and telling you expect it in the future because this happened today. No. Go back in time. Look at this yourself, please. Okay, so you have New York breaking with strength, not just this resistance, but this one, the maximum high, going finally to 3,170 and holding. Look at this session, PM, 12, 1, 215, huge buy again. Breaking actually, it's high. So this was also, what did I say? There's a video on my Instagram. Go back and look, see it. Powerful tip for trading gold. If New York closes its session after 2 p.m. buying, Sydney and Asia and London follow along. Look what's happening. London and Asia and London following that momentum. Why? Because it's going up. It's breaking, and not New York can't do everything forever. So it'll buy, it'll break, and it'll consolidate. And the PM session is going to tell you if they're going to reverse or if they want to continue. So the fact that they start buying also after their lunch break, that says a lot. And go back and study it. Look at how it is. And so that's what's happened. So Sydney, boom, opens quickly. There's a gap, by the way. There's a daily open gap, which also tells you huge continuation. And then Asia confirming. And what does Asia do? It comes down to retest its own opening price and bounces back up. The same thing with these sessions when Asia, in past trends, over here, it consolidates, and if it reverses here, it holds its opening price or previous structures to the upside. So it's not breaking support areas, important support areas, right? So here, what was an important support area? Well, this one, and obviously the range that Sydney made, and obviously the PM session. So if Tokyo would have completely sold off here and then consolidated and continue selling, that's very different. then having come down and bounce back up. You see that? So London copies that and continues. Like London says, okay, you basically just retested your daily open. It's bouncing again. We're gonna continue going higher. Let's go. Let's do it. So it also consolidates. This is the midnight open, another key algorithmic price. I wouldn't be surprised if New York respects the midnight open and continues going higher. Or because it's Friday, it might consolidate because again, the week has to get the next week has to get set up. So if this within here is going to be a nice future consolidation range, what's going to happen on Sunday? Sunday opens, comes down a little, and bounces back up. And Monday, the same thing, retest, and then continues. Consolidation, manipulation, distribution. Monday consolidation, Tuesday manipulation, Wednesday distribution. So it would make sense if today it's a consolidation or a continuation. If the market wants to continue moving higher and then reverse a little bit, right? And then it consolidates here. That's fine. That's perfect. That's the high for next week to take out. Maybe Monday comes a bit down over here, retest previous weekly high, fails to break below it, respects it, a nice V shape in the 15-minute time frame. Maybe I'm calling it here, trying to be a wizard about it, but probably. And then breaking that high it left today. Okay, so that is a little bit getting ahead of myself toward the next week, but basically that's what could happen. Let me study one more thing, which are the trades. So I personally was trying to sell all throughout this session, and I missed by a little bit this drop. That was a drop I was expecting. Seeing this bounce here, I said, okay, we're gonna go back up. And I went offline. I never sent any signals or whatsoever because I made a few profit on a few attempts. I ended up breaking even, whatever. I basically said, you know what, that's it. I'm not going to overtrade, and I'm just going to disconnect and see how the week plays out. And it's very powerful. Here's a reflection when I said less is more, and we have to aim to do effective trading, and that is 1 to 3 trades per week. We probably, maybe you guys probably did take advantage of this huge up move. I'm not, disappointed I didn't. I'm actually, now I'm like, okay, now I see what's gonna happen. Now I know there's not gonna be a longer correction. It's over. This whole this whole push down, like, whoa, what's gonna happen? Gold is at the edge of a cliff. Like, what's gonna happen? 3,000, is 3,000 gonna break? You know what? Now 3,000 is holding. Now I know 3,150 is gonna hold. Potentially 3,200. So this to me is the saying I like to tell you guys in the VIP: do nothing to do everything, or do nothing to do something. Basically, the fact that we missed, or I personally missed this push up, right? That's fine because I've done more. I've now understood. Now I understand the trend is going to continue, and that is our field, because we're going to look for the V shape. Again, the same thing. All this week we went up in profit. Lovely March week. We had we actually had I think a short trade somewhere around here we were able to catch. But now look at his lovely continuation. See, so now we could expect next week to be, if it starts to be bullish, the same thing we did in March. So we're gonna wait for each session to open, manipulate. We spot a V shape in the 1 minute and 5 minute time frames under specific lows and at specific algorithmic prices. So in other words, this is a nice midnight open, and look how the market is now drifting up away from it. So today, for example, it could be that London hands off the market to New York somewhere around here. What is New York going to do? They're going to look for liquidity around the midnight open or just below it, create a V shape quickly, and then continue moving higher. This day could look very similar, watch, to this day over here, right over here. Look at this. Midnight open, 1 in the morning. Asia comes below it. At 3 in the morning, New York Eastern Time, they start buying. London comes and respects it In this case, it's just below it, but the time is 5:49. Look at the time here, 5:45. Starts buying, getting away from the midnight open. What's happening today? 5:45, 5:30, 5:45. Buying, getting away from the midnight open. Maybe it's likely because there's already the algorithms move the market and they leave these sort of clues. Is likely we could see a setup around the midnight open. Is it going to happen? I don't know. I can't say it. I won't say it. I'm not going to tell you buy at the midnight open. I'm going to wait. What are we going to wait for? We go to the 1 minute and 5 minutes. So this is the 5 minute. Is there anything important in the 5 minute? I just see this huge manipulation and then close back above these lows. So these lows are key, like all this area. That is key. But basically the midnight open specifically. So what I would like to see is this low right here, 5:30 for London. That's the low it should respect. In extension, the bodies of these candles here and these wicks over here. In extension, maybe that is the lowest low that New York could go to. But what I would like to see eventually, because it's just 5:50, so it's 2 hours to go. But if London is somewhere around here by New York open, you could expect 8 to 8:30 to maybe consolidate a little bit and then start falling at 8:30 into 9:30 to 9:40. And so by 9:45 to 10, I want to see price already having started show rejection. I want to see rejection between 9:30 and 9:50-ish. The market come into the midnight open and then reject or start rejecting a little bit. And right at 9:30, come below it, 9:40 up above it, 9:50 be already above it. If I see that, I'm buying. I'm buying strong because the market open with a consolidation at 8:30. It starts trapping sellers, and at 10 in the morning they have come below the midnight open, respect it, and it should be a huge continuation buy to break that high. Okay, again, very similar, and I'll go back in time and show you the session that we traded and that happened, which is this one. So something very similar to this one. Look at this, 805 over here, London consolidating at the top, a drop until 9:45. At 9:40 it tapped the midnight open, and by 9:50 it starts buying. So 9:50, 9:55, 10, just huge buys targeting those highs and consolidating. PM session buys 145, 2, 3, 4. And then this happens. So this is what could happen. This is how the algorithms expand gold, and that is how it goes up and continues going up. So over here, just to finish, New York would close up over here somewhere, consolidating like this. And so what could that do? Sunday opening, potential open to the with a gap to the upside. Huge move up by Sydney and then collapsing down because it doesn't go up straight. And then you could have the low of the week by Monday, into Monday, coming back into these psychological prices. 3,200 is the barrier that I'd say could potentially hold. So by Monday maybe it'll go retest all this range. And if we look at the 50% of this area, what is around there? Oh, 3,204. Not a coincidence. Interesting. Okay. So around there, this is where the next week could make its low. And then it bounces again. And you see Tuesday consolidating, whatever. And then Wednesday expanding. Something like that. Maybe over here, New York starts selling. And then the market opens down. Sunday just comes straight down. Monday manipulates these lows and holds this PM session as well. That's possible. Right over here, 3,175. And then the week starts low to come up. Not necessarily like this, right? But this is sort of what could happen. My favorite idea is this one. New York closing the PM session consolidated, Sydney opening with Tokyo also maybe continuing higher and then selling a little bit. London looking for liquidity down to these lows, and then New York starts a reversal again, consolidating and continuing. Well, we can study that later, but anyway. Okay, 35 minutes, perfect. My goal was to make this under an hour, under 40 minutes. We've got 10 minutes. Quickly to reflect on something which I also mentioned I wanted to go over, which is the ironies of trading. So we just went through and wonderfully went over the plan, the strategy, and the system. What is the plan? The plan is to trade the New York session between 9:30 and 10. The strategy is look for the V shape within the 1 minute and 5 minute time frames happening at algorithmic prices or below important lows. That is the plan I personally have. You could implement it if you decide to. That's how I share my signals and my analysis in the Discord. Try it. If you have a plan, what is your plan? What is the strategy of your plan? And what is the system? The system is decision making. So how do you make the decisions within your plan and your strategy? Okay, are the candles a part of the strategy, the market structure? So the system has structure of candles, the time, the day of the week maybe. So our plan in the Discord, at least from my side, is I wait to see each session telling me the story that's bullish, nobody trying to do weird things, specific algorithmic prices getting respected, specific times of each session showing me what they want to do. That is one factor of my decision making system. At the New York opening, I want to see New York open consolidating a little bit but trading down in its early opening hours between 8 to 9, because that's how the algorithms set up the institutions for a good buy between 9:30 and 10. If, however, New York starts going up quickly at 8:30 or 8 or to 8:30 and 9:30 is at very high prices, that's not a business for an institution that starts working at 10 in the morning and gets a call from maybe a client who says, "Hey, I want to buy gold." They're going to be like, "Bro, it's at the max. Like it's at all-time highs." They're like, "Well, can we get it down?" "Yeah, sure." Dump 10 in the morning. And so liquidated, gold liquidated, no problem, taking profits. And at 2 p.m., when all the damage is done and everybody's trapped, what do they say? "Okay, brother, yep, it's now at 3,150. You think that's good? Yeah, let's buy it." Boom, huge buy at 2 p.m. Or maybe not huge, but just the PM session being bullish. That is the tail in the market. So again, the plan, the strategy, the system, I want to see during an uptrend with each session telling me the story that's up and bullish. I want to see New York open. If it's away from the midnight open, beautiful, because I would like to see the midnight open get tested between 9:30 and 10. If I see a V shape or a nice flipping structure in the 1 minute and 5 minute time frames at the midnight or below it, I'm buying. Eyes close my eyes, buy. I don't care. I'm gonna risk what I always risk or whatever I want to risk, and I'm gonna let it run. Why would I let it run? Target, take profit 1, 2 are like, I want to secure some money, but my real targets are above the resistance and beyond, because that's the trend. The trend is your friend, so hold it. Put a trade to secure profits. Put like 3 positions. You close one, covering your potential loss. So if you're willing to risk $20, take profit $20. Why? Because then you're risk free. The market, the first position you get $20. So that's it. You're like risk free. You leave the stop loss there for all the rest of your positions. Let's say you have 3. You're risking 10, 10, 10, 30. The first one you get 10, so you secure that one, or 30. So you secure what you're willing to risk. So even if the other trades come down below, you don't lose. You're winning. So there's a way you could sort of play with these with this how many positions you open. But anyway, I won't get too much into that. The targets, right? The targets are previous highs and algorithmic beyond levels. So 3,200, 3,250, 3,300, 3,350. All right. So right now, what the price is, 3,228. What's it likely is going to hold? The midnight open. What's below midnight open? 3,200. Okay, maybe New York wants to go all the way down to 3,200. Respect 3,200. And what's the next price? 3,250. The PM session closing makes sense to close at 3,250, right? Maybe beyond. I don't know. But that's it. 40 minutes, weekly review, trading psychology, a little bit, effective trading, less is more. Less is more. So right now, today, if this holds, you've got a good one trade of the week. In my case, I got 3 attempts on Tuesday. I broke even. Didn't do much on Wednesday to Thursday. Today, if I get a setup, I'm buying. And if I finish in profit, that's it. I basically ended up positive. If we miss a trade during the week, what's next week? Well, how is effective trading? 1 to 3 trades per week. So you take a few good trades and one excellent trade. It doesn't matter. You just try to do effective. Less is more. Over trading could lead you to making mistakes and impulsive decisions. That is, everybody falls into that. Is something you're never going to stop learning and practicing and perfecting. You want to spend less time in the charts. It is true. Sorry, period. You want to be free, not treat this like any other job. Okay? We went over the plan, the strategy, and the system. And we looked at selling around here, but that was dangerous. Remember that? Those sells over here. The trend is your friend. That's it. Rule number 3. The trend is your friend. All right, people. I hope you had an amazing week. I hope you're having a great day. I wish you an amazing weekend, a profitable week ahead. Take care. See you in the charts. Peace.